Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 19th of April. All right, now let's just have a look what's driving the market. The dollar, okay, the dollar index here I'm just looking at. The basket is heading lower. Now, it's all to do with lower yields. The prices here, as you can see on the US Treasury bonds, higher. That means lower yields. That means a lower US dollar. And we are seeing this very clearly, right? You've got the dollar moving lower, the dollar block moving higher. It couldn't be more plain and simple than this. So that's what you sort of need to be focusing on just at the moment. The Treasury yields are the main game. If I just give you a look at the news, you'll see this if you go looking for various bits and pieces. Dollar hovers near 1 month low amid subdued US debt yields, right? So they have actually come off quite a bit. Now it's not like a major catastrophic event, but these things are moving, well, they're just adjusting back down to where they sort of were before all the excitement around the yields sort of going through the roof. So this is a bit of a correction on the dollar. And if I just bring you across to the major pairs, just to give you a look where they are, you'll see very clearly the dollar index lower. Dollar Swiss is just dragging its heels. Dollar yen's heading lower. Dollar CAD, well, it's sort of lower on the day, but you know what? The price action on dollar CAD is not easy by any stretch. And I've blown up the euro, sterling, Aussie, and Kiwi, so you can see the impact here that this has had. Once again, euro, Aussie, and Kiwi sort of fitting the similar sort of picture. Whereas sterling, you know, it's got its extra head in the game with regards to the vaccines, and England's going to be so awesome once all the vaccines are rolled out. That's the general thinking. It's doing its own thing, but they are sort of bouncing. I mean, it hasn't been as dramatic, obviously, as that move on euro. All right. So what you get to work with is look at the structure of what's happening in the market, then go and find the pairs that you can potentially trade and put it together from there. Now, keep an eye on the data this week. Obviously, another week, second week of the month, but we're sort of just through 2.5 weeks of it. We've got some solid, we've got UK CPI, we've got UK unemployment figures. Really, the UK is going to be in the spotlight come, what have we got? Wednesday, Thursday. You got Canadian inflation numbers, and that's sort of all she wrote, really. There's a few PMI numbers out of Germany, but that's all we've got at the moment. This, I mean, as far as like looking for ideas of what's going on, as I said, it's clear and simple. The yields, Treasury yields are lower. Okay, you'll find that out. If the prices go up, the yield falls, and we're seeing clear cut what's happening here on the major pairs. Don't get like jump out of your skin. These things have gone up about 40 points. So it's like a nice little tickle to start the week. But by no stretch is it where everything, it hasn't really set the tone yet for the week. It is only Monday, but it gives us a bit of a lead in. So if you are looking to trade during the European North American sessions, make sure you factor in the treasuries and what they're doing. You may actually see a bit of a correction in the current prices. I wouldn't be surprised to see that. The Asian market invariably can be a misinformed lead somewhat. So outside of that, we're waiting for the week to reconnect, find out where everything sits, and then start to play it from here. Play it from there, I should say. But that's all we've got to work with just at the moment. Keep your eyes on the prize, and we'll see how this week plays out. All right, guys, have a good one. Cheerio.